All right, away from the hydrocarbon industry, let's come back to Market Street, where Nigerian banks are smiling to the banks in the manner of speaking right now. And thanks to Naira liquidity inflows from the Federal Allocation Committee, lower cash reserve ratio, and other sources. So the stock market is rolling in money, with the NGX index up nearly 4% this week, and the FGN bond auction on Monday overbought by more than 160%. Meanwhile, earnings are trickling in with the FBN Holdings and Geregu Power earnings in the box, while UBA holds a private roadshow for high-level global investment firms in the current week. Let's get on to our Friday Markets Martini with Chukwu, the CEO at Carrier Asset Management. Thanks for joining me again tonight for this show. Now, your stock market gained 1.3 trillion naira this week. Is the song "There Is No Stopping Us" back on the top chart this week? Good evening. Sing to me. Sing for me. Let me hear you.
Yes. Well, it's difficult for me to sing at this point in time, but the fact of the matter is that the economic conditions or the economic variables favor investment in variable income assets. And what do I mean by this? You just mentioned the kind of liquidity we have in the banking system today. We saw that the federal government federally collected revenue in the month of June was about 1.9 trillion naira. And if you remember, I had said this repeatedly, we're going to see a jump in federally collected revenue or allocations if everything was disbursed by more than 60–70%. So we're actually seeing an increase of more than 100%. Because on average, you used to have allocations about 815 billion. Now we're talking of allocation of 907 billion, which is part of liquidity coming to the system. And basically what is happening is that we're seeing liquidity in the system. At the same time, because you have excess liquidity in the system, money markets have collapsed. You talked about the oversubscription of federal government bonds. So with collapse in yield on fixed income instruments, investors have no choice than to underweight their portfolios in fixed income and overweight them in equities. And that's why we're seeing virtually money votes going into the equities market, principally because the yield or the effective dividend yield of very good counters is currently above the yield you will get on fixed income instruments.
But we're still talking...
I wouldn't say there's no stopping up, but I would say that the market, the current macroeconomic environment, the variables favor equity instruments.
But there are good news in the market, by the way. If you look at some of the biggest trades today, like yesterday with UBA shares, walk me through this big bank, for example. With UBA, we got about 1 billion shares traded on Thursday. Today, another 111 million. What's the big story around UBA here for you, Johnson?
Well, I think the basic thing that happened in UBA is that AMCON, which is today is the largest asset management company in the country, sold more than 900 million units of UBA. And you can understand why they had to sell. You know that AMCON is a bad bank, the resolution bank we have today. So they are obviously holding a large chunk of some of the banks, not just UBA, some securities or equities. And because we've seen a market rally, that we are talking of returns that are materially above what they were in the beginning of the year, such short-term resolution financial institution may want to liquefy their investment and use it to reduce the amount they are currently owing the central bank and other lenders. So I think that could be a factor that drove the volume of trade in UBA, because AMCON, like I said, the largest asset manager in the country, sold almost 1 billion units of UBA.
Interesting when you look at banks such as this with footprints across Africa. Do you think there's still a whole lot of room for UBA, for example, to talk to global investors about the way ahead, the new horizon for this particular financial group or company?
You know, in terms of geographical diversification, UBA is the most geographically diversified of the Nigerian banks, which also means that their revenues will not be subject to a single country risk. a single sovereign risk. So the benefit of that is that because they have revenues from multiple African countries, you are going to see a lot more stability in terms of their earnings than most other banks, other than Access Bank that has also followed that trajectory and is acquiring financial institutions outside the country. So for them, the African market still remains a major playground. As you know, Africa has about 1 billion people, and then Africa is actually the next big frontier. So the reality is that if you have your footprint in Africa, you have an unlimited growth potential. So I think UBA or any other institution, not just UBA, any other financial institution that has such footprint around Africa has strong potentials.
Interesting. Let's move on quickly, Johnson. Next week is the Monetary Policy Rates Committee meeting the sessions since Godwin Emefiele was out of office. What do you expect?
Well, posting that meeting is going to be the most interesting one we are going to see in the recent past. A couple of factors that comes to mind. One, the leadership of central bank is going to be very weak today because of the nature of the exit or the suspension of the Godwin Emefiele. So you're not going to have that confidence and assurance that Monetary Policy Committee members will believe that take to the management, to the meetings of the Monetary Policy Committee. What I think will happen is that the decision of the Monetary Committee will be largely shaped by their own reading or their understanding of the orientation and the thought process of the president. Because the president has made comments that basically intrude on the functions of the Monetary Policy Committee. The president appointed a special advisor on monetary policies, which basically means that the president is going to be having an oversight role on the primary responsibility of the central bank or the Monetary Policy Committee. So I think what we're going to see at that meeting is that they will tend to align with the thought process of the executive arm of government or the fiscal authorities. One of which is that the president has said he wants to focus on, he's going to adjust or push for a review of the monetary policies as related to interest rates. So you should expect that the Monetary Policy Committee are going to keep rates at the current level because they wouldn't want to run contrary to the executive arm of government who is expecting a lower interest rate on real sector lending. And good thing that this liquidity surveys we have in the country today has actually made it compelling for banks to even lend at lower rates. And I also think because we're having FX pressures, which is why they couldn't share the entire 1.9 trillion naira that got into the Consolidated Federation account, then we are having still high rate of inflation, about 2.79%. So I think the possibility of loosening does not even exist. Ideally, you should be talking of tightening. But given the orientation of the president, I don't think there'll be a tightening. So my expectation is they're going to hold rates at current levels.
Interesting. We got Tuesday late in the evening to see what happens, how the Monetary Policy Committee will decide with an acting central bank governor on that particular seat. It's going to be the first of such in many years for Nigeria. Thank you so much, as always, for those markets and macros insights for the week and a preview into the next. Thank you so much, Johnson Chukwu, Group CEO at Carrier Asset Management. Have a wonderful evening.